Hello everyone, welcome back to Fundrise Finance. The month of April has been pretty brutal, with the S&P 500 dipping into correction territory in just 1 month itself. Here we can see the S&P 500 down more than 10% for the last 1 month and down almost 14% year to date, which is very unusual as we don't see the market falling so much for the first 4 months of the year. The stock market chart year to date looks like mountain peaks with so much volatility. The market expected the big tech companies to bail them out, but when companies like Amazon and Google could not provide such good results, the market just tanked. The Nasdaq dropping more than 4% in a single day is so very unusual. In the last 1 month, the Nasdaq has fallen almost 15%, and year to date, it is firmly into a bear market with more than 22% decline year to date. The Dow Jones average itself is very close to its own correction territory. Even the dividend paying stocks or ETFs are not spared. In the last 1 month, SCHD is down more than 5%, and year to date, almost 6.5%. But what this volatile market is doing is giving us student investors an amazing opportunity to go out there and find those stocks which are amazing and are on sale so that we can continue to keep investing into them and reap the benefits. In today's video, I'm going to discuss 5 such dividend stocks which I feel are very undervalued at the moment and give us a very good buying opportunity. Let's check it out. But before that, as always, I request you to click on that like and subscribe buttons and that bell notification so that you are informed of all such informative videos whenever I post them. Let's give a quick look at the stocks that I had selected for the month of April. So we had Goldman Sachs, Jefferies, Tractor Supply, Huntington Ingalls, and UGI Corp. Of all these, in the last 1 month, Huntington Ingalls has been doing the best, returning almost 9%, and Tractor Supply Company is down more than 10% in the last 1 month. Jefferies and UGI Corp are barely unmoved. Goldman Sachs is down more than 5%. Huntington Ingalls is a monopoly in its industry of developing ships for the US government and should continue to do good given the recent tensions that we had between Russia and Ukraine and US supporting as much as possible to provide more ammunition to Ukraine. One of these companies makes it even to my list of May dividend stocks. To know which one is that, please watch till the end of this video. I'm sure you will not be disappointed. The first stock on our list is Texas Instruments, ticker symbol TXN. Texas Instruments designs, manufactures, and sells semiconductors to electronics designers and manufacturers worldwide. Texas Instruments has a market cap of $155 billion and gives a yield of 2.62% and a very good PE of 19.48. Year to date, Texas Instruments has taken a real beating. It's down almost 11%. The last 1 year, it is down more than 8%. The last 5 years, though, the returns are almost 115%. From a dividend standpoint, it has been growing dividends for the last 16 years at a 5 year dividend growth rate of almost 20%, which is really amazing. The payout is really good, less than 50%. Tracker Dividends gives Texas Instruments a score of 87 and considers it undervalued by almost 28%. But as for my calculations, which currents the past and current dividend yields and also future growth, I consider Texas Instruments to be undervalued by 10% with a fair price of $187. The second stock on the list is Air Products and Chemicals, ticker symbol APD. Air Products and Chemicals is from the material sector that provides industrial gases as required by the factories to run efficiently. It has a market cap of over $52 billion and provides a current yield of 2.69% at a PE of just over 23. Air Products and Chemicals year to date has taken a real beating, falling almost 21%. In the last 1 year, it is down almost 20%. In the last 5 years, the returns have been almost 65%. From a dividend standpoint, Air Products and Chemicals has been growing its dividend for the last 39 years, so it's a dividend aristocrat. The 5 year dividend growth rate has been good, more than 12%. The payout ratio is slightly higher, almost 64%. Tracker Dividends gives Air Products and Chemicals a score of 81 and considers it undervalued by almost 27%. But as per my calculations, I found Air Products and Chemicals to be undervalued by 16% with a fair price of $270. The third stock on our list is Stowe Capital Corporation, ticker symbol STOR. Stowe Capital is from the real estate sector. It's a REIT that owns a large, very diversified portfolio of investments in more than 2,500 properties across the United States. It has a market cap of $8.25 billion and currently gives a yield of 5.15%. Year to date, Stowe Capital has fallen almost 18%. The last 1 year, it has fallen almost 21%. In the last 5 years, the returns have been almost 18.5%. The great investor Warren Buffett has almost $700 million invested into this company, and that gives investors a great deal of comfort. From a dividend standpoint, Stowe Capital has been growing its dividends for the last 7 years at a 5-year growth rate of 5.85%. Track your dividends gives Stowe Capital a dividend score of 49. It considers Stowe Capital to be undervalued by almost 8%. But as for my calculations, I found Stowe Capital to be undervalued by 17% with a fair price of $33. The fourth stock on our list is Pinnacle West Capital Corporation, which is from the utilities sector and provides retail and wholesale electric services in the state of Arizona. It has a market cap of $8.52 billion and provides a yield of 4.56% at a PE of 18.53. Year to date, Pinnacle West has given a return of 2%. In the last 1 year, though, it has fallen almost 15%. From a dividend standpoint, it has been growing its dividends for the last 10 years at a 5-year growth rate of 5.47% with a payout ratio of just over 61%. Tracker Dividends gives Pinnacle West a dividend score of 75 and considers it undervalued by almost 27%. As per my calculations, I found Pinnacle West to be undervalued by 22% with a fair price of $86. The fifth and final stock in our list of dividend stock for the month of May is Goldman Sachs, which we also had for the month of April. In the last 1 month, Goldman Sachs has fallen almost 9%, and that makes its valuation much cheaper now. Goldman Sachs has a market cap of almost $106 billion and provides a yield of 2.51% at a very low PE of 8.41. Year to date, Goldman Sachs has fallen almost 23%. Last 1 year, almost 13.5%. In the last 5 years, it has returned almost 36%. Dividend wise, it has been growing its dividends for the last 5 years at an amazing growth rate of 22.76% and a very low payout ratio of just over 14%. In the recently announced results for Q2, Goldman Sachs gave a really good results, but it just got dragged down with the entire market. Track your dividends gives Goldman Sachs a score of 78 and considers it undervalued by almost 42%. As per my calculations, I found Goldman Sachs to be undervalued by 32% with a fair price of $404. So these are the five stocks we just discussed: Pinnacle West Corp, Air Products and Chemicals, Stowe Capital, Texas Instruments, and Goldman Sachs. So I feel these five stocks give a very good buying opportunity at the moment, and one should make use of it. Hope you liked this video, and I would really appreciate if you could hit that like and subscribe buttons. And also, please provide in the comment section, what are you buying into? How are you making use of the current opportunity that the market has provided? So until we meet in the next video, let's try to do as much as possible to be financially healthy. See you.